Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Wednesday, the 4th of February. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, traders dump software stocks as Anthropic's new AI tool sparks a $285 billion sell-off.
Prominent investor Michael Burry warns of a Bitcoin death spiral as almost $500 billion is wiped off digital assets in just days.
Plus, seeking a critical deal why, despite growing tensions, the EU is still preparing to offer the US a rare earth partnership.
Let's start with a roundup of our top stories.
Traders have dumped stocks from across the software, financial services and asset management sectors after a new AI automation tool from Anthropic sparked a massive sell-off. The latest release has supercharged disruption fears that have been simmering across the software industry for months. Jeffrey Epstein, who works on the equity trading desk at Jefferies, summed up the $285 billion rout as an apocalypse for software as a service stocks. He added that trading is very much get-me-out style selling. Mandeep Singh, Bloomberg Intelligence's senior global head of technology research, isn't quite so severe in his assessment.
Right now, what we are seeing is, the power of these large language models in coming up with a new interface, a chatbot or some sort of a simple interface where you can throw in data, you can automate, steps of your workflow, but generalizing that everything, will be fully automated is a stretch.
Mandeep Singh speaking there as software stocks slid from India to Japan following similar declines among their US and European peers.
Almost $500 billion has been wiped off cryptocurrencies in less than a week as the sell-off accelerated. Bitcoin dropped as much as 7%, falling to just under $73,000 on Tuesday, its lowest level since early November. Famed Big Short investor Michael Burry is now warning that the plunge could deepen into a self-reinforcing death spiral, in his words, inflicting lasting damage on companies that have spent the past year stockpiling the token.
The European Union is preparing to pitch the United States on a critical minerals partnership to curb the influence of China. Bloomberg understands the Memorandum of Understanding will look at several ways to cut dependencies through joint projects and export restrictions. Bloomberg's Freddie Fulston has more.
Key pillars of the EU proposal will look at price support mechanisms and plans to jointly source the minerals, which are crucial for modern technology. It also recommends ways to shield both markets from an oversupply of outside minerals and suggests the two sides build supply chains with each other. Crucially, the EU plan also insists both sides respect each other's territorial integrity, following US threats to seize the Danish territory of Greenland. In London, Freddie Fulston, Bloomberg Radio.
London's Metropolitan Police have started a criminal probe into politician Peter Mandelson over his ties to Jeffrey Epstein. Authorities are investigating the former minister over alleged misconduct in public office. The news follows Mandelson's resignation from the House of Lords after the Prime Minister Keir Starmer called his actions disgusting. But the leader of the opposition, Kemi Badenoch, questioned Mandelson's previous appointment as the UK ambassador to the United States.
I think that the Prime Minister has to take full responsibility, but there are a lot of questions that his Chief of Staff needs to answer. Who knew what and when? Why did the vetting go wrong? Why did they skip over lots of better qualified people and allow our country to be embarrassed in this way?
Conservative Party leader Kemi Badenoch speaking there following the release of US Justice Department files which appear to show Mandelson forwarding internal Downing Street emails to Epstein. The European Commission is also assessing whether the former Labour peer breached its code of conduct through contact with Epstein, given that Mandelson was the EU's trade commissioner from 2004 to 2008.
Novo Nordisk has warned of a steep decline in sales of its drugs in a move that shocked investors. The company says it expects sales will fall by as much as 13% due to lower prices for its blockbuster weight loss medicines, driven by a US government push to bring down drug costs. Novo's American depository receipts fell by 15% on Tuesday, their biggest decline since July. Novo's CEO, Mike Dowstar, spoke to Bloomberg after the announcement.
Of course, I can understand that negative numbers are not good news to the market, but once again, this is something that we had anticipated, and the obesity market is quite dynamic. And the reason the range has its numbers on each end is because so many things can happen.
Novo Nordisk CEO Mike Dowstar speaking there as the company also announced that it'll start a new share buyback programme worth as much as $2.4 billion.
Santander has announced a €5 billion share buyback after confirming it has agreed to buy Webster Financial for €12 billion. The deal will give Santander a major presence in the northeast of America. It is one of the largest ever US transactions by a European lender. Spain's biggest bank reporting better than expected fourth quarter net income this morning, coming in at €3.76 billion. The results were brought forward after Santander announced that it will pay a total consideration of $75 per share in cash and stock for Webster.
Well, let's bring you some of the other big European bank earnings out this morning. UBS announcing a share buyback of $3 billion with the potential for more as its fourth quarter net income came in more than $200 million ahead of expectations. Profits at the Swiss lender's key wealth management unit came in at $1.29 billion. That was slightly below estimates. In France, Crédit Agricole's profits missed expectations in the fourth quarter, coming in at $1.03 billion. That's as costs rose to revamp its Italian business, and it set aside more money for souring loans and other risks.
President Donald Trump has insisted that the United States and Iran are maintaining diplomatic talks even after a drone incident in the Arabian Sea, which has pushed oil prices up for a second day. The US says that it shot down a drone in self-defense that, quote, aggressively approached the USS Abraham Lincoln with, quote, unclear intent. Now, following this skirmish, Trump told reporters at the White House that talks with Iran are ongoing.
They are negotiating. They'd like to do something, and we'll see if something is going to be done. They had a chance to do something a while ago, and it didn't work out, and we did Midnight Hammer. I don't think they want that happening again, but they would like to negotiate. We are negotiating with them right now, yes.
President Trump there, as White House Press Secretary Caroline Leavitt confirmed US-Iran talks involving Middle East envoy Steve Witkoff are still scheduled for Friday.
And those are our top stories in a moment. More on the software sell-off sparked by fears of an AI revolution, plus why the EU is offering the US a partnership on critical minerals. But another story that I've been looking at this morning: what happens when you're planning the Winter Olympics and there's no snow? Until last month, this was a real fear for the organisers in the Italian Alps. Our reporters Laura Milan and Hayley Warren, though, have been looking about how climate change is reshaping winter sports venues around the world. Lots of really interesting facts, quite stark, in fact, in this piece. In the 70 years since Cortina held the Winter Games for the first time in 1956, February temperatures in the town have warmed by 3.6 degrees. And actually, all of the cities that have staged the Winter Games since 1950 have seen heating above the warming average for the whole planet as well. And this is a threat to, of course, all these ski resorts, but also winter sports in general. And they've been speaking to some of the athletes who are, they themselves, worried that their careers essentially could end up disappearing because of warming temperatures that make, you know, finding snow to ski on more difficult. Yeah,
absolutely. I mean, this year's Winter Olympics and then the Paralympics being held in lots of different venues in Italy. There have been worries about whether actually all the infrastructure would be ready in time. Maybe that's abating. The UK is sending 53 athletes from Team GB. The excitement's only beginning, but yes, a lot of it is going to be generated on made snow rather than natural snow, and that's also one of the kind of green concerns, isn't it, that snow making capacity takes up so much water.
Yeah, really interesting piece to think about as we're going to be looking at those incredible images from the Winter Olympics coming up as well. We'll put a link to that story in our podcast show notes.
Now let's bring you more on the massive sell-off of software shares, wiping some $285 billion off the value of tech firms and their backers. The fears were sparked by the unveiling of a new AI tool by Anthropic for legal work. Bloomberg Tech Europe anchor Tom McKenzie joins us now for more. Good morning, Tom. What is this new tool and why has it caused, well, such panic, really, amongst investors.
Yeah, I think what we're seeing is reminiscent of the DeepSeek moment of almost a year ago in a kind of smaller impact, but still, to your point, $285 billion wiped off markets. And it's not just legal firms and financial services, but also asset managers as well. What this is, it was simply a plugin launched by Anthropic, who, of course, have built this Claude co-work, which came out in January and was very well received by the industry, by the AI industry. Anthropic has and is the leader in terms of enterprise AI, and OpenAI is the leader when it comes to consumer AI. So Anthropic has that enterprise piece. They came out with this plugin that essentially allows legal teams, in-house legal teams, to do things like contract reviews, but automated. So you automate contract reviews, you automate compliance, legal briefings as well. Now, it does say at the end of the description of this plugin that you do need to have an attorney, so a lawyer, in the loop, essentially, to check this work, and it makes that caveat. But it was the launch of this plugin that led to a lot of investors saying, hang on a second, what happens to all these legal firms? What happens to all these financial services firms? What happens to broader software if this is just one example of how these large language models are pushing further up into these different verticals? And that seems to have been and was this significant catalyst in terms of the sell-off that we saw yesterday and continue to see in the Asian session today.
And this is not the first time that we've had, as you said, a release from Anthropic, Claude co-work in January, boosting investor jitters. How are the companies seen as being most affected responding to AI?
Yeah, and I can run through some of the companies that saw their shares hammered yesterday, towards the end of the session yesterday. The London Stock Exchange, Thomson Reuters, you had big asset managers. And again, you've seen some big information technology companies in India really under pressure right now. Interestingly, the hardware part of the AI story, so the chip makers in Asia are performing relatively well. The question, I think, Stephen, is going to be to what extent this is throwing the baby out with the bathwater. Some of these software companies, some of these SaaS companies, and this has been called a SaaS-pocalypse by some analysts out there, some will be able to integrate AI and very successfully deliver their products at a cheaper cost and more efficiently. That is a prospect for some of these software companies. The other prospect, of course, is that they will just have their work cannibalized, that there will be more pressure in terms of pricing, that the competition is just going to increase that much more. But for now, it seems investors is kind of selling now and they'll ask questions later. But there is a view from some analysts out there that this is also an opportunity to buy some of these software names on the cheap, given that arguably not all of them are going to be wiped out by this phenomenon. Someone will be able to adapt. It's just, for many investors, difficult to know which ones are going to win and which ones are going to lose at this point.
Yeah, it's so interesting, isn't it? Is it a sort of moment of realisation or not? Tom, thank you so much for being with us. Bloomberg Tech Europe anchor Tom McKenzie. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
The European Union is planning to pitch a critical minerals partnership to the United States to curb China's influence. This as Europe seeks to shape the Trump administration's push to strike global agreements, with meetings being held later today. Our Chief Europe correspondent Oliver Crook is with me now for more. Oliver, what do we know about this EU plan?
Yeah, well, thinking about sort of the receding ground, it seems, the receding common ground between the United States and Europe, this is one where the Europeans really hope to capitalize, where they see that the European and American interests on critical raw materials are aligned, and they'll take advantage of this meeting that's being held in Washington, D.C. with a number of ministers that are coming down today, and we understand we'll get a sort of an idea of what they're going to be talking about, which will be about critical raw materials, trying to secure it and trying to move away from the dependence on China. Of course, that was one of the big levers the Chinese used in the trade negotiations with the United States, putting the squeeze on those rare earth magnets that we saw. And of course, the Europeans were kind of on for the ride on that, passengers for the ride. They didn't even really seem to have any sort of effective negotiations with the Chinese themselves. They were just getting kind of the residue of kind of whatever the deal with the United States was. So this idea here, and what we understand from what would be in the deal, and this is what the Europeans are presenting, is sort of a way to stockpile critical minerals. The United States, as we know, on Monday launched a sort of $12 billion fund called Project Vault in order to stockpile some of those minerals. Also ways of jointly sourcing minerals together, cooperating to secure supply chains between Europe and the United States, and potentially for the United States and the EU to explore joint critical mineral projects and price supporting mechanisms. Now, the timeline for this, they'd like to get negotiations basically done in the next 30 days, and they'd like to sign a memorandum of understanding for a roadmap within 3 months. And this is, of course, super important, not just for the United States, but also for the Europeans. When I was speaking to the Rheinmetall CEO CEO a couple of months ago. This is, the biggest defense company in Europe. He says he has a meeting on critical raw materials and their security once a week, every single week, in order to make sure that there is a pipeline to basically stockpile those minerals that you need for basically everything advanced.
Well, the big question then, Oliver, is whether that's going to win favour, support, whether there's going to be any interest on the US side, given the tensions that already exist in the transatlantic relationship now.
Yeah, absolutely. And there are kind of different ways in which that kind of friction can occur. We should say that also notably within these discussions from our reporting that the EU proposal also insists that both sides respect each other's territorial integrity, which sort of is a nod to some of the friction we've had in the last couple of weeks over Greenland. Greenland, of course, one of the issues there was that there was a lot of critical raw materials that the United States would like to exploit. But I think also basically how you sell this to the United States will be very, very important. If this can be sold as a sort of broad headline deal where the sort of benefit for the United States is very, very clear. It has much more, likelihood of getting pushed through rather than this sort of complex, opaque, multilateral agreement, which, of course, the Trump administration, as we know, is very sort of allergic to. We should also say that one of the things that the Europeans are trying to pitch here is cooperating on export restrictions applied to third countries, i.e. the United States and Europe would be sort of working together. What I think is interesting, and I think what is different today than even 2 months ago, is for the Europeans, when you speak to these ministers and policymakers, there was a lot of sort of common ground on this idea of China, that if the United States tried to enlist the Europeans to try to have a collective approach on China, they'd be basically pushing on an open door. After what we saw in Greenland, after all of this stuff and all of this sort of trust that has been burned over the last couple of weeks, I think it's going to be more difficult. And that is sort of exemplified, right, by these trips by Mark Carney to China, by Keir Starmer to China, to sort of hedge against the United States.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.